Hey, this is Tom Nash, and welcome back to the Value Investor by TipRanks. Let's talk about the real problem the Fed is facing, and unfortunately, it doesn't have an easy fix. Let's start. The Federal Reserve is in the midst of the most difficult inflation-fighting campaign in decades. In fact, might even be in history. Now, the stakes are obviously high, especially for consumers, but obviously for companies, for the entire US economy. But there's one major problem that may prevent the Fed from winning the battle, and yet it gets mostly ignored, unfortunately, by mainstream media. You see, on March 16th, 2022, the Fed raised its target interest rate by 1/4 point to 0.25%, and this was followed by another 0.5% increase just a few weeks later, and the first of many more increases to come based on the planning of the Fed. Now, the goal of these interest rate hikes is essentially to make capital more expensive and to slow down the economy, which would, in theory at least, slow down the highest inflation run we had in the past 40 years. Now, look, the challenge here is going to be quite difficult. The challenge is for the Fed to obviously go through this process without crashing the economy. That's what everybody keeps talking about as the soft landing. Now, can the Fed actually raise interest rates and stop inflation without killing the economy? That's the whole question you keep hearing on again and again on mainstream media. But the problem is that I think everybody's overlooking the bigger issue. What would you say if I told you that this question is just a smokescreen and the real problem is way bigger than that? What if I told you that the Fed can't actually raise interest rates at all? And I don't mean can the Fed afford the risk of rate hikes since it might slow down the economy? I mean literally, can the Fed actually afford to raise interest rates? I got your attention now, right? Well, check this out. Because you see, the US is the largest borrower in the world with around $30 trillion of debt, which is 1.5 times our annual GDP. And it owns us through various T-bills, notes, and bonds. And like any loan, this $30 trillion loan requires constant interest payments. How much do you think we're actually paying right now in interest? Well, in 2021, we paid $562 billion in interest payments for federal debt, which is about 2.5% of our GDP. And it's actually more than any other federal department's budget as it stands. And it's even basically more than the combined worth of the 5 wealthiest people in the world. Jeff Bezos, Elon Musk, Bill Gates, Mark Zuckerberg, and Warren Buffett, which are worth about $415 billion. And now, to the best part. We pay all that money, all those payments per year, with an interest that's very close to 0%. What do you think will happen if rates would suddenly to go up? Simply put, we would need to raise another $1 trillion just to pay another extra 3% that the Fed is actually planning by the end of this year. And that means just for the first 3% of interest rate hikes, which the Fed plans to do quite soon, we need to raise another $1 trillion yesterday. So this begs the question, can we get it? Can we actually raise another $1 trillion? Well, looking at the numbers, it's going to be a little bit of a tough job. In 2020, the Internal Revenue Service collected $3.5 trillion in taxes. Where did this extra $1 trillion could come from? I mean, if you look at the structure of the US tax system, it's just strange. 5% of our tax collections come from corporate tax, 12% from property tax, 17% from consumption tax, and 41% is actually paid by individuals. And if you actually add social insurance, you get another 25%. So a total of 66% of our internal revenue tax collections is being paid by the poor and the middle class, by individuals. Now, if you look at the OECD with its leading 38 countries, only about 24% of tax come from individuals. 24. And it has to change. I mean, not the OECD, us. And I know there's an argument that due to the LLC structure and the S Corp structure in the US, a lot of business income flows through to the individuals. I mean, look, this is not a good argument. The EU has partnership tax status as well, which is exactly the same. So LLCs and S Corps are now different than the EU. It's a myth. The real problem is the lack of enforcement. Look at the effective tax these corporations are paying. Amazon is paying 5% effective tax, Nvidia 2%, Pfizer 8%. Why? Well, that's because they all shift profits offshore to places like Ireland, Singapore, Hong Kong, wherever it may be. All these companies are setting up shop elsewhere in a cheaper tax jurisdiction, and they're getting taxes there for the majority of the profits. It's called the offshore scheme. Simple. Now, that's not our only problem. I mean, you should definitely be stopping that, but what about inheritance tax? I mean, we have 40% inheritance tax in the US, but why do we exempt $12.5 million from every inheritance completely out of the tax realm? By the way, it used to be 5 million of exemptions, but a few years ago, they raised it to 12.5 million. I mean, 1 or 2 or even 5 would be somewhat reasonable, but why are we exempting $12.5 million from inheritance tax? Why? I mean, I guess the inflation is that bad. I mean, the bigger problem is this whole thing doesn't even matter because these guys don't even pay that. Because they set up partnerships and trusts and LLCs where the inheritance law doesn't even kick in because these assets are no longer owned by any individuals. They're the property of a trust that never dies, so there's no inheritance tax ever. And if you think I'm, blowing smoke up your bum, look at the numbers. In 2020, we had $18 billion of inheritance tax. Sounds like a lot, right? Total inherited amount was $750 billion. So instead of collecting $300 billion, which is 40% of that, we're exempting now 94% of it and only collecting $18 billion. In the past 25 years, we had $8.5 trillion inherited and only $0.5 trillion of taxes paid instead of the $3.5 trillion as required by law. 7 times less. And as you can see, the solutions are not complicated. All you got to do is actually start taxing inheritances, which means 40% of about $800 billion per year, giving you a nice couple $100 million to work with. That's a percent of increase of interest. How about the $1 trillion of tax revenue that's being lost every year because of these offshore schemes of these multinationals? That's another 3 or 4% of interest we can raise per year. So right here and now, we have about 4 to 5% of interest that we can pay for just by closing these 2 loopholes. But unfortunately, it doesn't seem like it's about to get done. So if you think that the Fed can actually increase rates without solving this problem, without generating extra tax income to pay for this interest, all we're going to do is actually print more money to pay this interest, basically making inflation worse, while at the same time, we're basically, shellacking the economy into oblivion. Makes no sense to me. But hey, what do I know? I'm just a guy on the internet with an opinion. Might be inaccurate, might be wrong, might be remedies of a madman. Let us know if you enjoyed this video. Head on over to TipRanks TV to comment, to interact with us. Would love to see you there. See you in the next video.